and welcome to this video on business and entrepreneurship education. Today we'll look at Unit 10, which is on cash and bank transactions. At the end of this unit, you will learn about business transactions, difference between cash and bank transactions, and how to calculate cash and bank transactions. Business transactions. Enterprises are engaged in business transactions. Business transactions are activities that affect the financial position or operations of an enterprise. Characteristics of business transactions are: transactions should have a monetary value, they should be supported by source document, and involves inflow and outflow. Some examples of business transactions are: purchase of furniture for 20,000 rupees to be used in business. Purchase of goods for resale for a sum of 15,000 rupees. Sales of goods for 25,000 rupees for cash. And payment of expenses for 8,000 rupees. As you can see, all these business transactions have a monetary value, are supported by source documents, and involves an inflow and outflow. There are three types of business transactions. They are cash, credit, and bank transactions. Cash transactions is a transaction where payment is settled immediately in cash. Whereas credit transaction refers to a transaction whereby someone buys goods and services which are paid at a later date. And finally, bank transaction refers to all receipts and payments made through the bank. What are cash transactions? Cash transactions refer to cash receipts and cash payments. Cash receipts are cash inflows, whereas cash payments are cash outflows. Cash receipts increase cash balance of a business, and cash payments decrease cash balance of a business. Some examples of cash receipts are cash sales of goods, sale of all assets, and cash invested by the owner, that is, capital. Some examples of cash payments are cash purchase of goods, cash paid to suppliers, paid expenses by cash, and cash withdrawn by owner. Now, let us see how to record cash transactions. Sarah started business with capital into cash 40,000 rupees. This transaction is a receipt. Purchase goods for cash 8,000 rupees. This transaction is a payment. Cash sales 4,000 rupees. This is a receipt. Paid electricity by cash 2,000 rupees. This is a payment. Bought machinery by cash 10,000 rupees. This is a payment. Paid wages by cash 1,000 rupees. This is a payment. And paid general expenses by cash 800 rupees. This is a payment. Remember, you should be able to differentiate between cash receipts and cash payments. Cash transactions are recorded as follows. As you can see, total cash receipts are 44,000 rupees. Total cash payments are 21,800 rupees. To calculate cash at the end, you need to take total cash receipts minus total cash payments. That is 44,000 rupees minus 21,800 rupees, which amount to 22,200 rupees. Bank transactions. Bank transactions refer to receipts and payments made through the bank. A business can deposit cash in the bank, pay suppliers, withdraw money, and issue checks. Now, let us see how to record bank transactions. Raja started business with capital in the bank 50,000 rupees. This transaction is a receipt. Purchase goods by check 26,000 rupees. This is a payment. Cash sales banked 21,000 rupees. This is a receipt. Paid insurance by check 2,500. This transaction is a payment. Paid wages by check 300. This transaction is a payment. Paid water bill by check 900. This is a payment. Purchase equipment by check 10,000 rupees. This is a payment. Again, remember, you need to differentiate between receipts and payments. Bank transactions are recorded as follows. Total receipts at the bank are 71,000 rupees. Total payments by check are 39,700. To calculate bank balance at the end, you need to take total receipts at the bank minus total payments by checks. That is 71,000 minus 39,700, which will amount to 31,300. So, in this video, you have learned that business transactions are activities that affect the financial position or operations of an enterprise. Cash transaction is a transaction where payment is settled immediately on cash. Bank transaction refers to all receipts and payments made through the bank. And credit transaction refers to a transaction whereby someone buys goods and services which are paid at a later date. If you need additional resources, you can visit the following links. Well, we have come to the end of this video. Thank you for your attention and goodbye.